Hi folks, this is Ch4. Welcome to a new video of my forex trading course. In this video I'm going to be talking about full potential projections for a swing, okay? Whenever you are involved in a swing trade, okay, in a swing type of trade, it's always important to know what level it's the possible final extension on the current swing that you are trying to, of course, you're trying to profit from. Okay, that's the final level we will consider to take our profits, because beyond that point, well, the swing is probably considered overstretched. Okay, please remember that this is always from a theoretical point of view. Full projections don't mean that the swing, first of all, will always hit that projection, and second, that it may not go farther up. Okay, it just means that that's the level where this new swing has come to basically pour in all the juice that was left on that swing. Okay, in order to determine what the final projection is, we measure the previous swing length, okay, the total impulse for the previous swing, and then add it to the tip of the retracement. Okay, let me mark it on the chart so you can have a graphical picture of what I'm talking about. By the way, of course, as usual, whatever I am telling you here, it always applies only to trending scenarios. Okay, trying to apply these concepts on non-trending scenarios might definitely not be a good idea, or they simply might not work. Okay, as you guys know, whatever I am teaching you here in this course is always assuming that we are in a trending scenario as per my simple moving average trend filter condition. Okay. Alright, as you guys know, in a trending scenario, a price basically harmonically swings off the dynamic area of support and resistance, okay? This area containing price above, as long as price remains above that level, and as long as, of course, the moving averages are still in place, parallel to each other, pointing in the same direction, etc., etc., we are considering that the trend is still in place. Okay, all right. So as I was mentioning, a price in any type of trending chart usually swings up and down in a more or less harmonic way. Okay. That's the that's the conditions we're gonna be looking for, and in order to, like I say, try to search where the current swing, okay, the swing we are trying to profit from, where might end, or where might let's say run out of steam, we gotta calculate the possible full extension for that swing. Okay, in order to do that, as I was saying, we basically measure, okay, the previous swing total width and the total length, let's say, and then we add it to the tip of the retracement. This being the retracement, okay, and this being the previous swing, we would obviously be looking to exploit this new swing up. Okay. In order to measure that, like as I was saying, we simply calculate what's the total length of the previous swing. Let's assume, like I said, we try to exploit this swing. Okay, so we we measure the total distance from the low of the swing to the top of the swing, meaning this blue line here, this blue segment, and then we add it to the tip of the pullback. All right, right there. This is the pullback. Okay, this is the previous swing. Let's say we enter long as the trend line, as the retracement trend line gives way. Okay, we enter long there, and then we want to know, okay, what's the farthest once again from a theoretical point of view this new swing can run to. And well, that's what we use this segment for. This price level is where price may run out of steam. As you can see, it touches that level, and from there it retraces back down. as I was saying before, that doesn't mean that price may not continue farther up, okay, in this swing. Of course, it may continue swinging up and down, well, basically forever, for as long as the trend remains in place. But within this swing, okay, before a healthy retracement takes place, from a theoretical point of view, the swing should go as far or as much as this level. Okay, as you can see, it touches that level, and from there it retraces about 60 pips to the downside, back to the dynamic area of support and resistance. Okay. As I was saying before, that doesn't mean that it will always reach that level. Sometimes it may fall short of that level, and in fact, if we measure the next swing, I'm talking about this next swing here. If we calculate the previous swing high, distance, and then we try to exploit the new swing up, as you can see, it fell shy for about 8-10 pips here. You see that, guys, how it fell shy of the final projection. That's why it's important to be conservative with your trades, with your target. So let's assume the full projections is, I don't know, let's assume 120 pips. You may want to cut that down to 105 pips. You know, not to try to squeeze every single pip out of the move, because sometimes, you know, markets are not perfect. I always say the same thing, and it may fail shy of the final target for a few pips. Okay, you don't wanna fall into that risk just for the sake of squeezing 10 more pips out of the move. You know, seeing your whole, all your profits be given back to the market as price retraces from that level. All right. Let me show you another example. In this case, the Canadian dollar against the JPY. And we have another beautiful uptrend as per those moving averages, okay? And, well, we have a whole new swing here, okay? And as we see that the retracement trend line gives way, we enter long somewhere around there, and we want to know where this swing might take us to, okay? What level might be the right place to place, the right level to set our final target. As usual, we measure the total distance from the beginning of the previous swing, okay, all the way up to the top of the swing. We have our blue segment, and then we add it to the tip of the retracement. Okay, this being the retracement, this area marking right now. Okay, I'm basically measuring this swing, trying to know where the new swing, okay, this swing up, where can it take us to? Okay, this would be our final target, and as you can see, price in fact overshot up to that level for about 70-75 pips. So, you know, kind of overshoots quite a little bit. Okay. But anywhere above that level, okay, as long as we don't get another swing to the downside, is considered, let's say, overbought levels, okay, extended levels. All right. Like I say, once we've broken through this full potential projection, the swing is considered overbought, and a very, very long and violent retracement might be due. Okay, at the end of the day, once the market realizes that we are in overbought levels, well, you know, someone might be willing to take some money, you know, cash in some positions, close down some trades, and therefore price retracing back down very heavily. All right, that's one of the reasons you don't want to stretch your targets beyond this level, because any further advance beyond that level may see quite a nice, well, you know, quite a nasty retracement back, and therefore you'd be giving out all the profits that you've been netting on this part of the swing. You know, in my opinion, it's first of all, it's not worth trying to squeeze all the way up to the full potential target. I always like to exit out few pips below that. Let's say if the full potential target is 100 pips, try to aim for 80, 85 pips. Okay, depends on what time frame you are trading. Of course, if you are trading off the daily chart, full potential projection for a swing could easily be I don't know, 200, 300 pip projection. In those cases, if it's a 300 pip projection, aim for 250. Be a little bit conservative, you know. It's not worth, like I was saying before, trying to squeeze every single pip on the table and just to see the swing fell shy few pips from that final projection and from there retracing back down. And also, it's not worth either trying to shoot for or to aim for any further gains above the full projection, because, like I say, any heavy, a nasty retracement back down might happen at any time, because at the end of the day, we are in overbought levels, okay? Overextended swinging price action, all right? Now let me show you another example. It's in this case it's a downtrending scenario. That's why I wanted to show you this, show you guys this example. It's basically the same thing. Another nice downtrend, moving averages parallel to each other, price harmonically swinging off the area of dynamic resistance. In this case, as we are in a downtrend, etc., etc. We have this clear swing down here. Well, actually, we have one here, then we have another one there, and well, perhaps we might be we might be involved in this new swing to the downside as usual in the direction of the main trend. We want to know where we should exit our final position. In order to do that, just as we did before, we extend the distance of the previous swing. We add it to the top. To the top of the pullback of the retracement, and it takes us all the way down to this level. Okay, we found a little bit of hesitation to reach that level. That's why, as I was saying before, don't aim for the full length of the swing, okay, for the full projection of the swing. Be conservative, exit out a little bit before, and most of the times you'll be able to easily get to that level. Okay, you'll be able to your targets will be easily hit. Instead, if you try to aim for the full length of the projection, well, sometimes you might get it, sometimes you may not get it. It's not worth it, in my opinion. In this case, you did get it, but that not quite always happens. Okay, so be conservative with your targets. Exit a little bit before that, and more often than not, your targets should be hit. Okay. That's basically it for this video. As you guys can see, it's a pretty straightforward concept. Simply measure the previous swing distance. As I always say, every swing has two parts. First the impulse, and then you have the retracement. Okay, you have the impulse, then you have the retracement. All right, so simply measure the impulse part of the previous swing, add it to the tip of the retracement part, and you will have the full potential move for the new swing. Okay, always, once again, remember that this is from a theoretical point of view. Okay, it doesn't mean that it will always reach that level, and it does not mean it cannot extend beyond that level. But nonetheless, if you are conservative with your targets, if you exit, let's say, a 15, a 20% before hitting that full potential extension, more often than not, your trades, as long as the trend keep place, of course. You never know when a trend might bend over and turn around, but as long as the trend is still in place, more often than not, if you are conservative with your extensions, with your final targets, you should be hitting those levels, all right, fairly easy. Okay. Alright guys, that's all for this video. I think it's a pretty easy to understand concept. Nonetheless, if there is anything you didn't quite get or you'd like to discuss in detail, as usual, feel free to send me an email and I will very gladly get back to you as soon as possible. Alright folks, that's all. Bye bye.